Hi, this is Justyna Redelkiewicz, and you listen to the channel Go Crazy, Go Cosmic, where we speak about startups, investments, and reaching for the stars. In today's episode, we will cover the way on how investors evaluate companies that are pitching, applying for investments in early stages. Usually, the framework that is used is so-called 4 Ps of early stage investments, and each P, each letter, represents a criterion that then adds up to the overall evaluation. The first P is the problem. So, which problem the startup is trying to solve? It's also important to understand that the problem is relevant, that the problem is big, so the market that is solving this problem will grow. And in this criterion, it is also frequently estimated if the company is scalable. The second P is the progress. So we want to see over time how the company is progressing, how fast they are progressing. If we need to ensure that this company will have 50% growth year on year, it means that every week something new should happen, a new customer, a new market open, a new development, a new event, something. So during the investment phase, we don't normally decide after the first meeting. The companies are seeing one investor, then somebody else in the investment board. And during this time, we also evaluate what is the progress year on year, week by week, month by month. The third P is the price, which is, of course, the valuation of the company. So even if all the other criteria are matched and we are quite convinced that we want to invest in this company, the deal may not happen if the valuation is way too high, is way above the market average, that we believe that the company, that the stock should cost much less. And the fourth P is the most important one, is P like people. In the early stages of the investments, meaning seed, pre-seed, Series A, the people are the most important factor. We need to believe that this founder, this founding team is able to break the walls, is able to survive in difficult environments, is able to lead the people, is able to develop the product. And we really evaluate the energy that this founding team brings, how they relate to investors, how they speak with the customers, how they speak with the partners. Are they convincing? Because we know that they will need to pitch to the market multiple times before they start generating revenues and scaling up. In the evaluation of people, we also see how relevant is their experience. Usually, if you bid for some certain specific technology, we want to make sure that this person, the founding team, has the relevant expertise that is exactly in the area in which they want to develop the startup, and that they have the right network, the right connections to make it happen. But surprisingly, when companies bid to us, they don't focus on these points, but they focus on the fifth P, which is the product. And this is something I would like you to avoid. Don't focus on the product, focus on the problem, focus on the people, and focus on the progress. And then we will discuss the price. Thank you.